A sudden stock crash is disturbing, but it is not a sign of imminent financial collapse. It doesn't even mean that investing in the stock markets is no longer a good long-term investment. Bearing this in mind, this video will be looking at what to do in case of a stock crash. Do not forget to like the video and click on the red bell icon to subscribe to this channel if you have not done that. Without wasting more time, let's delve into the business of the day: what to do in case of a stock crash. The fear of a stock market crash is never far away, but thanks to the 24/7 news cycles and the consistent information bombardment from social media, one minute the stock market is hitting a record high, the next, bam! We are deep into the chaos of a stock market crash, looking towards and hoping for a correction. Stock crashes are normal and are caused by several factors. Yes, history can tell how long a crash correction and a bull market lasted, but it can't say when a crash is coming or the nature of the projected magnitude of the dip. But we know it is going to happen soon, and there's no telling when. It has been this way throughout the stock market history, and there is no stopping. When you understand this, it becomes necessary to start planning for the future, and in case it happens, which is almost always the case, continue watching this video to know what to do in case of a stock crash. Number 1. Relax. Yes, that's right, relax. Take turns having deep exhales and inhales, go out for sightseeing, have fun with your family or friends. It's not easy, I know, but stay away from social media as much as possible. Turn off the news, eat as many times as you can, feel good about yourself, be at peace, and then relax some more. After that, get a soda or beer or whichever is your favorite. Down a can or two and relax again. For long-term investors, the right thing to do after a stock market crash is nothing. Then they relax. Until your nerves are calm, try to stay away from your account balances. Remember, emotions cloud judgment. Number 2. Remember your appetite for risk. The stock market has its roller coaster month, but one good thing is that the short downturn is almost always overshadowed by the long periods of sustained growth. Well, that's the paper reality. When the storm happens, do not let your brain accept or trigger an emotion-driven reaction, like selling off the stocks and missing out on the eventual rise. All investors know that investing in stocks comes with an inherent risk. You knew this and went for it regardless. Before investing, after market research, you might have done a risk profiling. You assessed the risk and accepted it. Remember how much volatility you can stomach and for how long you can take it. Measure your actual reaction towards the market agita and the need for your ability to override the unpleasantness that comes with a crash and stay invested for future recovery. Number 3. Resist the urge to sell. The worst thing to develop after a stock crash is selling panic. One of the best strategies and principles for a successful investment is buying the lows of a stock and selling at a high. Selling after a crash is doing the direct opposite. You may think it is beneficial to cash out now and come back when the market shows good fortune, but you don't know when this would happen, and there's a big cost attached to losing just a few days in the stock market. The beauty in the stock market is that money invested in a stock or fund and left to compound over a long time brings a greater return, compared to when the stocks are all sold out and the investor misses out on a few good days. Number 4. Reinvestment. A stock market crash is when fortunes can be made. Be ready for the fall and be willing to invest cash to vamp up your investment, buying up stocks whose prices are dropping. You may miss out on a stock's low, that's no problem, but be opportunistic in the investment you think and have studied to have a good long-term potential. A good way for handling a stock crash is keeping a wish list of the crashing stocks you'd like to own. And do not be surprised if you freeze in place during the moment of opportunity. It happens. To avoid that, use the dollar cost averaging strategy. So when a stock crashes, it is best you buy then. And it's true, you don't know if it will rise tomorrow, but one thing is certain, you bought it at a price cheaper than it was yesterday. Number 5. Rebalance and revamp your portfolio. Diversification is important for successful investing. After a volatile period in the stock market, the value of your investment may change enough to cause a shift in the actual value of your asset allocation. It is better not to rush in addressing this big sudden movement in the stock market. Let it be a reminder that your portfolio needs a checkup, a revamping to bring it to balance. Now you have known what to do during a stock crash. Do you know you can also earn money from it? Here's a little tip on how to make money during a stock market crash. Buy stocks on good businesses that can generate real profits and attractive returns on equity and have a very low to moderate debt to equity ratio. This is because big firms hold up better under distress. Create a dollar cost averaging strategy of buying and selling at a fixed rate and amount of money. It helps you to stay away from the peak and also not to cower at the bottom. After that, reinvest the dividends, as this would help supercharge your dollar cost average strategy. Stay away from fees. During a stock market crash, try as much as possible to stay away from fees. This helps to compound your ability to survive in the downturn. Finally, and most importantly, have a backup plan. Create a backup cash generator and income sources. There are a lot of business ideas online and offline for you to pick from. Keeping your cool in the event of a stock crash is the best thing that can ever happen to any investor out there. If you panic, you've made a lot of mistakes. Some grave, some mild, and some bring lifelong regrets with them. But except in a situation where you need money, do not sell off your stocks after a crash. It is okay to buy some more, to revamp your portfolio with more investment if you have the money to do so. Do everything you can to review your investments, make adjustments, and collate your assets allocations, bringing them to a balance. Having stayed to the end of this video, what are your thoughts on the topic? Do not hesitate to drop your suggestions and opinions in the comment sections. Also, remember to like this video and subscribe to our channel for more engaging content. Bye!